Private equity investments are still generating favorable results despite some impact from the pandemic and remain inviting to insurers. Here to discuss a best special report on Insurers' PE investments are Lauren Magro, Associate Analyst, and Jason Hopper, Associate Director, both in AM Best Industry Research and Analytics Department. Jason, we're going to start with you. The report notes that PE holdings increased in 2020. What was behind that?
Sure. Thanks, John. So ultimately, the life annuity segment accounts for about 3/4 of total industry private equity holdings. So whatever that segment does will kind of naturally drive the insurance segment as a whole, which has been increasing for the past number of years. Having said that, the property casualty segment has also been increasing investments, which grew about 10% in 2020. And the health segment also has some modest investments in private equity. So the low interest rate environment and kind of the higher returns and fewer places, specifically in the alternative asset space, that insurers could kind of place money and get the returns that private equity is currently offering, does then make private equity funds a little bit more attractive in the current environment.
Lauren, why are these investments so attractive to life insurers compared to the other major insurance segments?
Sure. Thanks, John. So life and annuity insurers, they depend on investment income and spreads for their returns. Therefore, the higher yields that come from private equity investments are attractive to them, especially in the low interest rate environment. Additionally, due to the recent high unpredictability in the public markets, private equity investments give insurers further diversification as an asset class with lower correlation to the public markets. Additionally, given the scale and the size of the life insurers' investment portfolios compared to the PC and the health segments, there are more investment dollars to be invested, and the higher yields are attractive to them given the current environment.
Is there a specific type of PE investment that insurers favor, Lauren?
Yes. So all three segments, the life and annuity, property, casualty, and health segments, they all allocate a majority of their private equity investments to leverage buyout funds. However, because of the rising stock market and cheap debt financing, leverage buyout prices have risen to record highs, including buyout multiples at record highs. Therefore, the returns may see some pressure. However, all three segments do maintain exposures in other PE funds as well, including in venture capital funds, which make up over 25% of the industry's holdings and have performed incredibly well in 2020.
Jason, are there any concerns regarding the increased exposure?
So we have seen a greater mix of insurers investing in private equity funds in 2020. We see both publicly traded companies as well as private companies. Larger companies do account for the large majority of private equity investments. However, we have seen smaller companies start to enter that space. Pooling of funds through indirect investments has kind of helped some of these smaller companies get within this asset class. But in general, exposure is manageable. Only something about 15% of our rating units have exposure to private equity funds, accounting for more than a quarter of their capital. So while it does vary throughout the industry, generally exposure is manageable.
Thanks, Jason. Lauren?
Thanks, John.
Thanks, John.
That was Lauren Magro, Associate Analyst, and Jason Hopper, Associate Director, both in AM Best Industry Research and Analytics Department. You can find the full report online at ambest.com. For AM Best TV, I'm John Weber.